You establish a pattern of financial independence and discipline by investing early in life. An early investment shows the true distinction between saving and investing. Never consider your age to be a barrier to investing. You are never too young to do so. Investing may undoubtedly quadruple your profits, but it also allows you to develop market experience, which allows you to make judgments based on that experience rather than on fear. Sometimes you might just need $100 or much less than that for investing, and you're done. Now we just have to wait and see how the market functions. Hello guys, welcome back to Crypto Point. In today's video, we'll give you the best ways you can invest your money. Also, don't forget to subscribe to our channel for more informative and exciting videos. Let's get started. We're usually told that accumulating wealth is a marathon, not a sprint. But it's easy to get wrapped up at the outset if you don't know where to begin. There's almost too much information on personal finance and investing to absorb these days due to technology and the internet. You can talk to a financial advisor, invest with a robo-advisor, or manage your assets fully on your own. You can also trade individual stocks, engage in index funds or mutual funds, and acquire fractional shares of companies you believe in. Then there's cryptocurrencies, non-fungible tokens or NFTs, and a whole world of digital assets that some experts tout as the best method to increase your net worth. All of this begs the question, what are the greatest strategies for accumulating long-term wealth? At the end of the day, there are a variety of strategies to construct a strong investment portfolio, including stocks, bonds, mutual funds, real estate, and other options. The best method for you, however, is determined by how much additional income you have, your risk tolerance, and when you might need to access your funds in the future. How investing works. Investing is a process of purchasing financial assets with the goal of increasing your wealth through the appreciation of those assets, as well as paying the interest or dividends in some situations. While you still can invest through a financial counselor or a brokerage firm, you can also open your own account and invest in non-traditional assets. One of the most important factors to consider before getting started, according to financial planner Taylor Schultz, presenter of the Stay Wealthy Retirement podcast, is your investment time horizon. While 10 years may seem like a long period to some, in the world of investing, 10 years is nothing. Schultz explains, in a decade, anything can happen. Schultz takes the period from January 2000 to December 2009 as an example, during which the S&P 500 lost 0.95% overall. If you have a 10-year investing horizon, diversification is critical, according to the advisor, and it may be difficult to go all on one risky asset type. As a result, you'll probably have to settle for smaller returns. Another thing to think about is your risk tolerance. The stock market in the United States and Bitcoin, for example, are both usually referred to as long-term investments, although their risk profiles are vastly different. According to Schultz, understanding how much risk you can take without panicking and selling is an important issue to consider when making a long-term investment. Diversification, a good asset allocation, and lots of time are required to build wealth. Here are some of the finest ways to invest in order to develop long-term wealth. Mutual funds and exchange-traded funds or ETFs for stocks. ETFs and mutual funds are investment vehicles that are made up of a group of comparable assets such as stocks, bonds, commodities, or other assets. Mutual funds are normally purchased directly from the business that runs the fund, whereas ETFs can be bought or sold on a stock exchange. One of the surest ways to grow long-term wealth, according to Brian Bruggerman, Director of Financial Planning at Baker Boyer, is access to the entire stock market over time through ETFs and mutual funds. When you adopt a technique like this, however, it's critical to stick to it. Investors, according to Bruggerman, are often their own worst enemies, and growing familiar with market ups and downs is crucial to maintaining the course and allowing your money to compound. Investors can actually take more focused approaches to strategies that have a logic for outperforming markets over time as they get more confident with their investment portfolio, according to Bruggerman. Adding concentrated ETFs and mutual funds, which hold a smaller number of equities with a stronger exposure to each, is one way to do so. This investment choice, on the other hand, isn't for everyone, and it's certainly not for the faint of heart. The value and momentum elements have outperformed the broader market over various time periods, but staying committed to the approach requires a level of conviction because both strategies will underperform the market at times, Bruggerman adds. Index funds with low fees. Index funds are often low-fee funds that track a benchmark index such as the S&P 500. A combination of low-cost index funds invested within the global stock market, according to Schultz, is his preferred long-term investment. According to him, a portfolio of low-cost index funds should favor small-cap value and international index funds, which are signaling higher expected future returns given present prices. I don't know when those greater returns would appear, he says, explaining why these funds are in his long-term investment portfolio. Investors who wish to create wealth over time should select index mutual funds or even ETFs that invest in indexes like the S&P 500 or the S&P 1500, according to financial planner Jeff Stark, a portfolio manager at My Capital Management. He claims that they can serve as the backbone of your stock portfolio. REITs. Real estate, according to Schultz, is another excellent long-term investment. However, because investing in a primary residence often yields low returns after fees and inflation, he prefers to invest in publicly traded real estate investment trusts or REITs to gain exposure to this asset class. REITs are real estate investment trusts that hold a collection of income-producing properties, enabling people to invest in real estate without having to own specific buildings. Most importantly, REITs allow you to invest in real estate through a taxable or retirement account without the trouble and worry of being a landlord. REITs provide quick access to income-producing real estate all around the world, Schultz notes, and they have historically provided investors with substantial returns over lengthy periods of time. While REITs are available through any large brokerage firm, you can also use a platform like Fundraise to invest in real estate. This firm offers its own private equity REITs, which have low costs and account minimums. To keep your cash safe, choose short-term investments. Aside from long-term investments, there are numerous short-term investments that can allow you to keep your money safe while allowing you to benefit from compounding. Just keep in mind that get-rich-quick schemes abound in the investment sector, so do your homework before investing your hard-earned money. Consumers should be wary of assertions that are misleading. Schultz warns, there is no such thing as a low-risk, high-return investment, says the author. Consider the following short-term investments for your financial portfolio. Money market funds. Because of the stock market's volatility, money manager Michael Misharitsky of Milestone Asset Management Group advises anyone who may need money in the next few years to avoid investing in it. He recommends instead looking into high-yield money market funds. Money market funds invest in short-term assets that may be liquidated quickly and are often obtained throughout an investment fund business. They normally pay a greater rate than cash at the bank, are totally liquid, and are FDIC insured. Misharitsky explains, alluding to the Federal Deposit Insurance Corporation, which covers certain assets, certificates of deposit. Finally, certificates of deposit are a good option for short-term savings or savings that you may require in the future. CDs typically pay higher rate than savings accounts because you're tying up your money for a set length of time, ranging from 3 months to 5 years according to Keating. CDs are normally available via your local bank or in certain cases an online bank, and they are FDIC insured, so you don't have to worry about your money disappearing. Building wealth requires time and patience. Building wealth is more than a numbers game. It's a competition with yourself that demands perseverance and commitment. While there are several strategies to establish a long-term investment portfolio, you should consider your investment time frame and risk tolerance before getting started. However, because one of the most significant aspects in wealth creation is time, it's critical to begin starting as soon as feasible. So if you have money that isn't invested in a short or long-term asset, think about your options so that you can make sure your money is functioning for you. So that's it for today's video. Don't forget to like and subscribe. Also, let us know in the comments if you are investing your money and how.